Then in year one, you are going to start paying this million rand. But when you pay on an annual basis, it's going to be 127,635 rands, right? Of this amount, 15,135 in year one is your capital reduction. That means this is the impact you're going to have directly on the million rands in the first year. But then 112,500 of this amount is interest. And people don't understand that. This is your biggest expense, if you can see. If you have an investment property, this amount here reduces your rental income on an annual basis significantly, right? And if you don't have a bond that you have taken against that investment property, you lose out on reducing your rental income with this expense. That means you are 112,500 rands exposed, minimum. You are 112,500 rands exposed to SARS when you don't have this. That's the first part I want us to understand. This actually just allows you to actually be taxed more. But if you have a bond, you get to actually benefit by this. I'll tell us how.
Hello guys, how you doing? Henry here, Success Inspiration, back with another video. So I'm here with Mandilake.
That's right.
How you doing, bro?
Good, man. Can't complain. How are you?
Awesome. So guys, we're talking property. So man, so today we're gonna talk about a few things, right?
Yeah.
But first of all, right, an important thing that we need to talk about,
Yeah.
right? Obviously, in terms of property, I mean, you basically have got your own mindset when it comes to
That's right.
when it comes to property.
Yeah.
But you have built a property portfolio, so you definitely know what you're talking about
Yeah.
with regards to this. So the first question I'm going to ask you, right? If you had R1 million, if you have R1 million right now, and there's R1 million property on the market, so you are employed.
Yeah.
You're employed. You get R1 million, whether it's a bonus at work.
Yeah.
Would you basically buy that R1 million property cash, or would you go to the bank and get that R1 million property financed?
I would go to the bank anytime. Never will I buy my property. It's mostly with the conditions you're putting. Cash.
Yeah.
You
wouldn't buy it cash?
I wouldn't buy cash. It's mostly with my bonus money.
Yeah. But why, man? Why not buy this thing cash? You own it. That's that. And obviously we do know that let's say there are no transfer fees and whatever it is. Let's just say it's 1 million straight. You want to pay and that's it. But why would you do that?
Debt and taxes. Debt and taxes is what makes the wealthy. And I'm going to explain that. If I lose access, first of all, to the million rands which I have, which is liquid cash, I'm losing an opportunity to grow that money. For me, whilst I have access to it. I could also seize any opportunity that rises instantly that needs me to have cash. That's the first thing. But if I take that million rands and I go and I bind it with a liquid asset, not with an illiquid asset, illiquid asset, which is an asset, which is a property. I can't buy anything with a piece of my property if something rises. Do you get my point? So I either have to wait until I sell it, or I'm gonna have to wait until I refinance someday. So right now, what I would then do is to take that million rands, which is cash, put it in an instrument that's going to grow it faster than my real estate investment. Then ask the bank to actually give me that million rands, because I want to show them I've got the million rands. I can pay this, because that's what the bank wants you to actually show them. You can afford. I show them that I can actually afford this. They give me the money. I go and I buy that asset. And then one of the things that are very key, I want the interest expense that's going to be coming from the bank, because that's what I'm going to use against my taxes.
Okay.
Which is different from when I buy cash, because I'm losing out on that interest expense against my taxes, and that's something we're going to break down later.
That's what people want to know. Most people are like, you know what? You can't tell me that you are basically making a saving by, making deductions on your PAYE,
Yeah, yeah,
against the interest. So
yeah,
people are saying that no, if you basically are paying interest with the bank,
yeah.
it's always going to be more than whatever you think you're going to save on your taxes and all these things. So that's basically. But today we're gonna break that down to
Yeah.
figure out, is that really true at the end of the day?
Yeah.
So you are the numbers man. You're gonna give us the numbers,
Yeah.
and people are gonna be able to see that.
Yeah.
However, there's also a question whereby someone's like, okay, but dude, if you're going to include your taxes on this one, your interest on this 1 million rand property,
Yeah.
at the end of that mortgage cycle,
Hmm.
it's normally what?
It's about three times.
Three
Normally three times
times?
the price. Yeah.
Three times?
Yeah.
What makes you so sure that this property would have increased in value, that you have, or that's also another question.
Yeah. Yeah.
Or is that a consideration at all, or what?
So firstly, we're certain that by the time you finish paying off the bank in 20 years' time, if you actually choose to actually use that time, it's going to be three times the amount, right?
Yeah.
And if you then don't have this view that this interest expense is actually it's actually my go-to to reduce my taxes, which means I'm using these taxes, these expenses in order for me to reduce my taxes. This actually works to my benefit in terms of my tax payment. I've recently made a video concerning how South African revenue generation when it comes to tax collection is based on individuals.
Yeah.
Because of when you look at the Stats SA's statistics, you actually realize that 37% of our revenue collection by SARS is from personal income tax.
Okay.
Right? Then 25% comes from your VAT. Then about 18%, 18.2% comes from your corporate income tax. So that tells you right there that we as individuals are paying higher taxes. And remember that individuals have tax brackets up to 45%.
Okay.
So that means taxes are hefty on individuals. And that's money you're never going to see. I keep going back to that. It's money you are never going to see. I want to make an example. If you are earning 1 million rands, right? And let's just say, for sure, we're not using accurate numbers. If to make an example of someone who is in the 45% bracket, that means 450,000 rands of that 1 million rands goes to SARS. You effectively earn 550,000 rands.
Wow.
That's a revelation right there, right? 450,000 is a lot of money for me to never see
Sure.
in my life. So if there are ways for me to claw back on that
By
450,000
how
rands,
much though are we talking about?
what do you
Let's
mean
say
by
if,
how much?
if we, like, by how much, obviously we're going to go into the figures, but on
Yeah.
a top level, by how much do you think we can actually claw back off on that 450,000?
It depends on how much risk you are willing to take, because of if you can incur expenses that actually have a tax effect that's equivalent to 450,000 rands, then you can actually get all of that back. So there's no capping as to how much losses you can make,
Okay.
because of it's in the losses
Yeah.
that you are able to claw back. So the government incentivizes anyone that helps it to achieve its goals.
Yeah.
So when you are then renting out property to people, housing people is a government mandate. So if you then rent out property, that's why then there are deductions. You get these deductions against the income that you are making from that trade. So it's called a trade because of it actually is recognized by the Income Tax Act, so that you can be able to declare your income, and then you'll be able to actually get the deductions that are associated with that income.
Yeah.
And we know for tax people, I'm sure they're going to be looking at their thresholds there. If ever you are employed and then you do property investment and you rent that out, and you're making less than 30,000 rands, it's not considered as another trade. But then if you are making more than 30,000 rands, then it's a trade. Then you can actually deduct those expenses. It gets technical. But then what I'm trying to get to is you can get as many properties depending on your cash flow that you can then claim enough expenses to claw back on that 450,000 rands, and even more, because of when you get to 5 properties, again, five
Yeah.
properties that you are renting out, not your primary residence. 5 properties that you are renting out. There are new properties. You bought them new from the developer, whatever. It's got conditions as well there. We get a section under section 13. Section 13 is capital allowances. It's called section 13 SACS. it actually allows you to deduct 5% of the cost of each property once you have 5 properties that are new that you are renting out. And then you actually, so it allows you to have more deductions for you to create more expenses or more losses so that you can actually claw back, if you're an
Okay.
employee, on that employee's tax that you've already paid. But also, if you're a business, you can then actually get to create what we call assessed losses. Assessed losses are carried forward for you to reduce your future taxes that you would pay.
Wow, man. Yeah, that's interesting. That's interesting.
Yeah.
But right now we're gonna talk about, this issue of interest versus, your tax deductions,
Yes.
right?
Yes.
So that's what we're gonna talk
Yeah.
about now, and we're gonna use the amorti
Amortization table.
amortization table.
Yeah.
That's what we're gonna do. Okay, so what is this table, man?
This is an amortization table, right? So this actually shows us the breakdown of our repayment of the liability that we take from the bank against the property we are buying. For example, if we are buying a property that's worth R1 million, and we're assuming, again, this is an investment property that you are buying into, right? We're trying to show the benefit between either paying taxes or paying interest, right? So your present value is going to be R1 million in the first year, because that's how much you're taking from the bank. We're assuming that your interest rate is 11.25, right? And then we are assuming that it's going to be over a period of 20 years, right? Then when we use this information, the annual repayment of this R1 million is going to be 127,634.48. We round this off to 635 in the table down here. All right. So I want us to keep these figures. Pay as you earn, or your employee's tax that you would have paid from your income from the employer, right? If you are earning 100,000 a month, and then we made that 1.2 million, and we said it's your taxable income, your annual taxable income. Yeah, it's 1.2 million. Then this throws you into the 41% bracket, right? So this is how much taxes you would be paying in a year. And if you don't have any expenses that you are incurring from your other trade, right? Other trade, which is outside of your employment, you would lose out on this 374,280 on an annual basis, because this is money you'll be paying to the government that you're never going to get back, because you have no other deductions to actually incur, right? So this is the first part I wanted to actually show us. Then I want us to see the actual table.
Okay, so
Yeah.
in terms of, you're saying that in terms of the payee, you can deduct payee when it comes to
You can
expenses
Yeah,
on
so
other trades.
Yeah, another trade. So if you have another trade outside of your employment, then you become what we call a provisional taxpayer for tax purposes. And we're not going to deal with the technicalities of that, but you become a provisional taxpayer because you have more than one income. Then SARS actually, or the Income Tax Act, allows you to have more deductions than a normal employee, because a normal employee has very limited deductions, like your pension fund, your retirement annuity, your provident fund, your medical aid. Those are roundabout, right? And very few. But if you are a business, you are considered a business, whether it's your corporate income tax, then you have more deductions than an employee.
Okay.
So then this other trade opens up the individual to more deductions, which enables them to incur expenses that can reduce the tax they've paid as employees. Right? So this 127,000 that we've shown here, 635, that is an annual repayment, right, against the bond of R1 million, is broken down into the following. In year 0, right, that's the year you are asking the bond to give you R1 million. So you imagine yourself being given R1 million by the bank, even though it doesn't come to you physically, but it pays for an asset that's going to be yours, right? We actually right here assume that you've received that R1 million, that's why it's positive. Then your balance is R1 million, right? It's a liability. Then in year 1, you are going to start paying this R1 million. But when you pay on an annual basis is going to be 127,635 rands, right? Of this amount, 15,135 in year one is your capital reduction. That means this is the impact you're going to have directly on the million rands in the first year. But then 112,500 of this amount is interest. And people don't understand that. This is your biggest expense, if you can see. If you have an investment property, this amount here reduces your rental income on an annual basis significantly, right? And if you don't have a bond that you have taken against that investment property, you lose out on reducing your rental income with this expense. That means you are 112,500 rands exposed, minimum. You're 112,500 rands exposed to SARS when you don't have this. That's the first part I want us to understand. This actually just allows you to actually be taxed more. But if you have a bond, you get to actually benefit by this. I'll tell us how we actually get to benefit. Then on the first day, your balance is likely to be 984,865, right? We're talking technical numbers now. This is also imperative for those that have investment properties that normally also submit their returns with these, because most people, they just submit to SARS as a deduction the full 127,635 and they get penalized because they also are claiming the capital amount. For those who are submitting on an annual basis who have investment properties to SARS, they must be careful of this breakdown, because most people claim the full 127,635 as an expenditure against their rental income, which is incorrect, because SARS is going to penalize you because you are also claiming the capital amount. It's only the interest expense that you're allowed to claim, right? Which is supposed to reduce your taxes. Which is supposed to reduce your taxable income. So it's this 112,500 rands, right? Then you actually have that balance first year. Second year is the same thing. One of the things that people can pay attention to is the fact that if you look at the capital reduction of your repayments is increasing on an annual basis in this table, right? That means what you were paying in the first year had less impact on your capital amount against the bond, right? But as you continue to pay, you're actually getting to impact your capital portion a little bit more. But this is for people that are interested in quickly paying off their investment properties, which I am against. Again, so I'm going to say that, which I am against, because of this right here is the benefit for you as the investment property owner against taxes. I want us to pay attention to that. Against taxes, this money that you're never going to see, this is the formula for you to claw back on this money here that you are never going to see again, right? So we're going to come down to this tax effect here. This is the second part I was trying to make sure that I break down. So the interest portion of your repayment is what is imperative for you as the investment property owner when you are going to submit your returns, right? So this is the first part of what you have as a benefit. Then we go to the second part, right? Because when you then own this property and you actually have the bank financing you, these other ones, you can actually have them as deductions even if you don't have a bond, right? But their size is way smaller than the interest expense that you have here. Why? Right here, I've listed just a few. For example, if you are using an agent to manage your property, right? They source your tenant, they charge you for managing the property on a month-to-month basis. You get to claim that amount. Let's just say you are actually you are paying the agent 1,000 rand a month, right? It's 12,000 in a year. You get to claim this money against the rental income that you are making, because this is expenditure that you incur in the production of income. Section 11A, for those who know the Income Tax Act, allows you to actually claim this, right? Then you have your rates and taxes. If, for example, you pay your rates and taxes 1,200 a month, they will at the end of the year be 14,400, right? Then you have your levies that you might be paying if you actually are in a complex. If you're paying 1.3 per month, then that's an additional 15,600, right? Then you can have insurance against the building, which is also deductible for tax purposes. We could say 2.4 in a year. Maybe you pay $200 a month. If you've incurred repairs and maintenance, right, or 5,000 in that year, you can claim those. Your accounting fees. If someone else is preparing your accounting your accounting
Your books,
statements,
yeah.
your statements, then you actually pay them. Let's just say 1,000 rand a month. Then you actually charge that 12,000 rand. Your bond interest. So if you look at all of these 12, 14, 15, 2.4, 5,000, 12,000, they don't come close to the bond interest for that year, right? Which is 112,500 here, right? Because of this right here is your superpower against taxes. We are not talking about whether you are going to make a profit or not. We have not gotten there. We're talking about taxes, right? Your sunk cost. This is what actually leads you to get to an assessed loss status for tax purposes, right? So if we then look at this, so I've added this up here. So we've made an example of someone renting out their property for 10,000 rands a month. Then on an annual basis, they would be making 120,000 rands from rental income. That's what we've done here, right? Then we take these expenses that I was showing you down here against this rental income, right? You have your 112,000 rands, which is your interest from the bank. 112,500. You have your repairs and maintenance, your rates and taxes, which are 14,400. You have your levies, 15,500. Insurance and your repairs and maintenance and your accounting, your accounting fees, right? These all add up to 161,900 rands, right? And then you end up in a loss status. Why? Because of your expenses are more than the income you are making, right? Then you have a loss of 41,900. This is the actual figure. This is not a tax effect, this is an actual figure. Now, the government says because you are now helping us to actually achieve our goal of housing people, we will allow you to reduce your employees' income, your employees' tax with the losses, the tax effect on the losses that you have incurred. So this means this money is not just money you're saying, I'm never going to see.
Yeah.
But this money helps you to reduce the taxes that you would never see so as to build an asset value, which is actually the property investment that you have. So we take this 41,900, right? We said you are on the 41% bracket. Multiply by 41% is 17,179. This is the tax effect, right? We actually have not yet compared the interest that people are thinking that you are losing, because if you look at this, you are not losing on the interest, but you are using the interest to your advantage, right? So of this, you get 17,179 that you wouldn't get back.
Okay.
You reduce this amount with this, and this is the minimum that you have. Because imagine then, because it means from here you could actually take this divided by that 41%, or not even by the 41%, because if you want to see how much property you can invest in and rent out for you to have this benefit, it means you have to look at the 17,000 rands as 41% of what you could actually get in a bigger scheme. You could have a portfolio of 6 million rands.
Yeah.
Multiply this then by 6. Then that means you are on a refund status on an annual basis when it comes to you submitting your returns. Because what we then saying, when you have this system in place, you don't have to wait for a bonus on an annual basis, because you know that you are going to get a bonus from SARS by them actually paying you back. Now, how is this then still beneficial? One, you getting to get back money that you wouldn't see. Number two, you are investing in an asset that's actually appreciating. You've got an annual refund from SARS because of you are incurring losses actually justified here. That's the second second superpower at this particular point in time. Saying you are clawing back taxes you would never get back.
Awesome.
By virtue of you having invested in the space. And it actually gets more. If ever actually you remember the conversation earlier, when you have 5 of these that you are renting out outside your primary residence, you get an additional deduction of section 13(6) of the cost of your asset. So here 5,000, you have 5% would be 50,000 rands. You have an additional 50,000 rands that you can reduce your rental income with. That's actually adding 50,000 here. You are actually getting to 91,900.
Yeah.
You multiply that by this, you actually get, so your impact is here. If you get my point.
Yeah. Awesome.
Yeah.
So definitely there is a save.
There's more than one side. There's more than saving. There's more benefits on it. The contrast of this is without that. So if I take that out, so the reverse effect of this, so if you don't have a bond in place, right, then you would have deductions against this rental income of 49,400, right? Now this is what this total would be, which would mean here you would have profit. This is for tax purposes. People must just not get excited about the word profit. So it's 120,000 minus 49,400. Then you have 70,600 profit. This then becomes taxable. You say times 41%. Multiply this by 41%. This is additional tax, 28,946. This is additional tax you would pay to SARS over and above this.
Awesome.
This is on an annual basis.